everyone. Welcome to your latest Carson's Take 5 with Ryan and Sonu. Sonu, this one we're titling it 3 Reasons to Celebrate this July 4th. A lot of reasons to be happy. Hopefully, by the time a lot of people listen to this, July 4th will have already happened. So hopefully you enjoy yourselves there and have some fun, or had some fun. But Sonu, let's start it off. I guess we said we want to talk the stock market, right, the consumer, and inflation. So I'll talk about the stock market. So you'll probably be, let's start with the consumer. That could be a little bit of you, then I'll do the stock market, and then we can both talk about inflation. So let's reason to celebrate. Number one, the consumer is in pretty good shape. Take it away for a little bit.
Yeah, and for 2 reasons. One is household balance sheets are strong because a lot of people have what makes up their balance sheet? Stocks, for one, especially on the more wealthy side. And then real estate, right? So home prices have been going up, stock prices have been going up. That's a good reason to, celebrate right there. And then, so that's the wealth side of the balance sheet. But then you think about the income flows, right? Incomes are strong. Wage growth is fairly strong. It's not red hot. We're going to talk about inflation. If it was red hot, then we'd have to worry about, what does the Fed think about? The Fed doesn't like red hot wages, but all of us do. And I think wage growth being strong is positive. Employee compensation over the last month rose about 0.5%. And what does that mean? Translated to annualized base, that's close to about 6% annualized. That's very strong, right? So from 2 angles, both household balance sheets and incomes, we are looking at a strong consumption. And why is that important? Well, the U.S. economy, I would say the global economy runs on U.S. consumption. So a lot of positives there.
No, absolutely. So reason number 2 to celebrate a little bit this July 4th, really good start to the year. S&P's up at the midpoint approximately 15%. That's good for any year, Sony. That's the second best year ever for the first half of the year. Only 1976 was better during an election year. So it's rare to see this much strength during an election year this early, but it's happening, which is good. Now the big question, of course, is okay, what's it mean? Got lots of noises. Come on, guys. Got lots of noises going on here. Sorry.
It's July 4th week.
There's lots of stuff going on. Everybody's making noises around me. But anyway, so you think about it like, okay, we're up double digits for the year. What does that potentially mean? Well, historically, when you're up at least double digits, the median rest of the year is up close to 10% median, higher over 80% of the time. Your average, any average year, the median return in the last 6 months is about half that, like 5.5% higher, about 7 out of 10 times. So just a long-winded way of saying a good start to a year actually opens the door for potentially better returns going forward. So let's see how much time we do. Yeah, we got maybe a little more time. So you want to add anything to that one?
Yeah, and look, I always like to say, momentum is good. Momentum begets more momentum. And all of you listening to this, there's going to be a lot of noise for the next 5 months, politics, election, all of that. But Ryan, I think your numbers give you a good perspective. We've had a strong start to the year, so the rest of the year is already expected to be strong just based of that. And it's pretty strong even in election years, right, Ryan?
Yeah, I mean, usually the fourth quarter of an election year is very strong. Third quarter, not so much. Think about the last couple of elections, right? We had some weakness ahead of the election in 2016, weakness ahead of the election in 2020. And then once the uncertainty of the election was alleviated, you had a pretty good rally. So wouldn't be too surprised if that took place again. So at the time we're recording this, there's 31 all-time highs so far this year on the S&P. There's a chance it might be 32. But either way, we're above 30 by the middle of the year. So I'm saying by the time people listen to this at the halfway point. I took a look when you have at least 20 all-time highs the first half of the year. The rest of the year, I've got it right here, is up a median of 9.6%. Again, really strong potential returns. And once you start making new highs, you tend to continue to make new highs, as we've said a long time on these very weekly videos that we've been doing. So the final thing we wanted to talk about here is inflation. This kind of brings it all full circle. Nobody likes inflation. Stock market doesn't like inflation. Remember 2022, everybody.
The Fed doesn't like inflation.
Yeah, we had a bear market in stocks and a really, really rough time for bonds as well. But inflation improved a lot last year, 2023. Stocks did great. But now we've had, I guess what I'm going to lay it up to you is people say inflation's stubborn now, year over year, up around over 3%, depending where you look. But it's stubborn. Lately, it's been stubborn. Tell me why that's not true and why inflation should continue to improve the second half of this year as a reason to celebrate this July 4th.
So one is, inflation matters from our perspective, two reasons. Obviously, it matters to the Fed and what that does to markets, but it matters for everyone listening to this, right? Pocketbook issues. And the good news is gas prices are going down. All right, food prices are easing. Grocery prices have come down in certain pockets. I mean, yes, things are still a lot more expensive than 4 years ago, but people's incomes have also risen. That's the other side of it. So all
Right.
that to say, we're seeing inflation adjusted incomes continue to rise. And we saw more of that in May. We just got the data. So that's
Yep.
positive. That's what drives inflation adjusted consumption. We call it real consumption, right? In economist speak, market speak, right? I would say that like after adjusting for inflation, the consumption trend looks pretty positive, right? There's
Yeah.
nothing to worry about in terms of recession. And then you get to, okay, inflation mattering for the Fed, right? Like you said, 2023, we had a good run. Last second half of 2023, inflation started falling. We got disinflationary trends. It seemed like Q1, the first quarter, was a setback, but now we've got a couple of more positive data points, especially in May, right? Showing that
Yep.
disinflation trend is continuing. And in terms of inflation being stuck, I would say it's not really stuck. We're probably very close to the Fed's target at 2%. What's stuck is things like shelter inflation. And that's solely a methodological thing, right? It's just because of how the Bureau of Labor Statistics calculates that, how the
Yeah.
government calculates. That's why it looks like it's stuck. I think inflation is back to target, and that's positive from the aspect of I think the Fed will cut interest rates going forward.
Well said. I mean, we have grocery store prices, and the grocery down 4 months in a row. New car prices down 5 months in a row. Used cars, according to the Manheim Used Car Index, down like 23% from the peak a couple years ago. So yes, prices are still more expensive than they were a couple years ago. We're not ignoring that part, but wages, net wealth have been increasing pretty nicely as well to help a lot of consumers along the way. And what the market looks at is kind of month over month, year over year numbers. Those are really starting to improve, and we expect them to continue to improve the second half of this year. So again, the 3 reasons to celebrate this July 4th: a strong consumer, really strong stock market, and continued better inflation coming. Sonu, what are you doing July 4th? And we're going to sign off.
I think eating is on the list. I mean, eating well. Some fireworks will probably make it out in the city and, try and catch some fireworks by the river/lake over here in Chicago. What about you?
Yeah, I think the same thing. I think just hang out, eat some food, and have some fun, and watch some fireworks. So from everyone at Carson Group, we wish everyone a happy and safe July 4th. A lot of reasons to be happy so far the first half of this year. We think more are coming. And next time we do one of these, we'll actually discuss our mid-year outlook. We'll talk about our outlook for the remainder of 2024. So we'll see everybody then. Take care. Thank you.